We're going to get to the quarter into earnings, but I want to just start with some news that we heard from the president. Just a little earlier today, the U.S. is set to hike a tariff rate on EU auto imports to 25%. This coming from the president just a little earlier today. What does that do for Magna International?
Yeah, we've been dealing with trade policies and tariffs over the last 1 year. As you know, Tim and Carol, we have a footprint in Europe and other parts of the world. The important thing is, in most of the places where we are present, we are aligned with the OEM and we produced systems and components and supplied to them locally. So really not much travels across ocean for us. So it's going to be how the strategy of the OEM changes, not as much an effect for us. And mostly, in most of the cases, the OEM is the recorder, importer, they're responsible for it.
So Swamy, in this case, this news doesn't, in other words, doesn't have any effect on your company, nothing material.
Not the first order effects, obviously. As vehicles start having a different price point and different hurdles as they come across, there might be an effect on the demand of the vehicles, but not directly to Magna.
One thing I want to ask you, as of early 2026, average transaction price for a new car in the U.S. officially exceeded $50,000, with Bloomberg reporting a record of roughly a little bit above that. And I'm just, we're buying bigger vehicles, EVs are more expensive. How does that at all impact your business?
Yeah, Carol, that's a great question. The DNA of the Magna, especially the auto industry, but more so for Magna, is continuous improvement. We call it operational excellence. We go through this improvement process year over year, and that is the reason why we have been able to post such good results even in the first quarter, where we expanded margins, generated solid cash flow, and reaffirmed our full year outlook. And that is nothing but execution despite the softer production environment. So we have to continue that process and do little by little. We call it inches make champions. And we look for every penny everywhere in the organization.
One thing that we're trying to get a good handle on, Swamy, and we're going to be speaking to some other CEOs in our 3 and 4 o'clock hour, is what the consumer looks like, not just in the United States, but around the world, and how that behavior has changed with gas prices moving higher. What can you tell us, just what you're hearing from OEMs right now, and really what you're seeing as far as your product moving?
Yeah, I think, as you know, Tim, we have a broad portfolio, so we have the chance to have those strategic discussions with the OEMs. From a consumer perspective, affordability is definitely top of the list. From a consumer preference, they're looking at different features in terms of safety, comfort, and convenience. That is what is defined as the software-defined vehicle or the smart car, whatever name you want to give it. There is a balance now of how to get all of this into platforms so that you can still get the features that the consumers in the market demands, but in a way that is economical, and that you can get by scale, right? And that is where we at Magna talk about modularity and scalability, so you can engineer once and deploy it many times. And that is the thing, over the last few years, there has been a significant change in trends. It's been EV, it's been autonomous, it's a whole bunch of things changing, connectivity. So we're seeing the confluence that we've never seen before. Now the question is, how do you prioritize so that you can give the consumer what they want and still keep it affordable?
Yeah, I think about the factors right now, Swamy, coming at car buyers, right? Higher gas prices, cars just expensive. You see this flat production environment globally, particularly on the back of those rising gasoline prices. So I'm just curious, you mentioned, really squeezing out costs. Is that the strategy? That's how you guys navigate through all of this to keep the business where you want it to be?
Carol, you bring up a good point. One of the things that you have to remain flexible and be resilient. We work in an industry that has long cycles. It used to be 4 years and 3 years. Now we're talking about 2 years, but still a long cycle. So in other words, what you're producing today has been designed at least 2 or 3 years before, right?
Yeah.
So you have no option but to think of scalable and be resilient so you can react and be agile about it. And from a design perspective, that's where I talk about modularity and scalability. The trends are changing. So you can't say, I designed this and that's all it's going to be. You look at our powertrain, we are addressing EVs, we are addressing hybrids, we are addressing ICE vehicles. As the trend changed, for example, in North America from EVs, pulled back a little, and now we are starting to see a significant trend in hybrids. The portfolio was set in such a way that it doesn't matter which way it goes, we can lever up the particular module scale and get back to the market. So on the design aspect, that's how we are looking at it. We have to do the same thing in assembly lines and process. If the volumes go up and down in demand, we have to be able to react to it. Mm-hmm. And on top of that is what I said, you got to look at every penny across the organization. So it's a combination of all of this to stay competitive in the market.
We have about a minute left, Swamy. In this environment, we're seeing higher commodity costs with oil still above $100 a barrel. We talk, of course, about higher gas prices, but then the second order derivatives that come from that when it comes to refining and refined products. Just in 30 seconds, how does that affect your business?
Yeah, some of the pressures that we see, obviously, now with what's happening in the Middle East is energy, freight, and certain input costs like resins, right? The playbook is the same. First order is mitigate operationally as much as you can. Then you work through commercial recovery mechanisms that are in place over time. And you need to do this, collaboratively with the customers.